Howdy, swings. The market was unsettled due to concerns about the upcoming FOMC, Federal Open Market Committee, meeting. The market attempted to recover and gain positive momentum, but ultimately ended the day with losses. While the negative impact was somewhat anticipated, the market reacted more strongly to the bearish pressures than initially expected. Is today the end of the investor sell-off, or will it continue into tomorrow? Let's take a look at Fullhapce daily swing market forecast to get some answers. Daily market index movements. The market had a mostly downward trend. Gold and bond performed relatively well. The VIX, which measures market volatility, increased by more than 8%. S&P 500, 5,597.12, minus 0.20% down. Dow Jones, 40,834.97, minus 0.15% down. Nasdaq, 17,816.94, minus 0.33% down. Russell 2000, 2,152.5, minus 1.11% down. Gold future, 2,552.1, 2.01% up. 10-year bond interest rate, 3.82, minus 1.27% down. VIX index, 15.88, 8.4% up. Here is daily sector performance. Software, media, restaurants, healthcare, and basic everyday goods showed better performance. On the other hand, diabetes-related stocks, Boeing, energy, EL, housing, transportation, capital goods, semiconductors, and banks didn't perform as strongly. Here are the reasons. Stocks saw some minor selling, likely due to a calm and uneventful trading session. No economic data was released in the US, but there may have been some anxiety about a potential revision in labor data and upcoming Federal Reserve meeting minutes. This sentiment could have contributed to lower yields. The end of July earnings season has generally been positive. Looking ahead, there are two main events left in August, with some investors potentially paying more attention to NVIDIA's report next week over the Federal Reserve Chair's speech at Jackson Hole. Here are things to consider. There's a possibility that job creation numbers may be revised downward by up to 1 million, which could raise concerns about economic growth. Neither Harris nor Trump seems to be presenting a strongly optimistic economic message. A Federal Reserve governor made comments that seemed a bit more cautious about inflation than what's been commonly discussed. Overnight, central banks in Australia and Japan seemed to take a tougher stance on inflation, while China kept its interest rates the same despite economic challenges. The recent report from Lowe's wasn't surprising but still showed weaker than expected results, including lower comparable sales and reduced guidance. An Iranian official hinted that any retaliation against Israel could take a long time. Here is daily market forecast for swings. The weekly market has strong upside potential, but the daily market has strong downside potential and volatility is at a critical point. The market is facing resistance in the 5,600 to 5,650 range, making it difficult for prices to move higher. It is suggested that the market's flat move today could be waiting for the next minute's release, which could trigger a big move in either direction after the minute's release. It's also possible that today's stronger than expected sell-off may have further unsettled the market. On Wednesday, the release of the minutes could lead to a bearish outcome, given that last month's Federal Reserve meeting was considered to have fallen short of investors' expectations, so there is a possibility of a lower close. However, we think that if the market is down on Wednesday and Thursday, it might be possible to recover or move higher on Friday. Some helpful additional insights are as follows. The recent rise in the stock market has been supported by three factors: good earnings reports, expectations that central banks might lower interest rates, and favorable economic data. Investors are hopeful that the Federal Reserve and the European Central Bank might cut interest rates next month. However, upcoming job data could pose a challenge to this optimism, though it might not have a long-lasting impact since it reflects past events. Stocks are currently expensive compared to their earnings, which might make it harder for the market to handle any negative economic news. Here is devil's advocate. The opposing scenario is that there's a possibility that the market could move past S&P 5650 tomorrow and keep rising. If this happens, it might be a good idea for some people who are feeling uncertain to consider holding on to their current positions and avoid making any sudden or aggressive decisions. The rationale for this scenario is as follows. The earnings season has generally been positive. Companies generally have reported better than expected results and provided optimistic guidance for the future. The Riksbank, Sweden's central bank, lowered interest rates on Tuesday and indicated they might cut them further by 50 to 75 basis points by the end of the year. Canada's Consumer Price Index, CPI, showed signs of cooling in July, both in overall and core inflation. While the opposition scenario have a point, we do not think it is likely because we believe the market will be influenced by the FOMC minutes, which may not meet market expectations, more than other factors. Regardless, viewers might want to be careful about the concerns raised by the opposing side. Here is the conclusion. According to our calculations, the market can move higher on a weekly basis, but it can also move lower on a daily basis. As a result, it looks like the market closed today with no major events. The market is standing by and could make a big move in either direction on Wednesday afternoon. On Wednesday, our calculation shows it is likely to end the day by extending today's losses. However, if the market experiences losses on Wednesday and Thursday, I think there could be a chance for a recovery on Friday. Traders may be wise to monitor market action on Wednesday and Thursday, gradually taking profits and adding protection, as we discussed yesterday. Viewers may be wise to consider both outmain forecast and opposition scenarios to manage risk effectively. Thank you for watching. Fullhapce Intelligence, the best investment partner for swing traders.